Hey folks, this is a Dylan Radigan episode on June 13th talking about why we have no confidence in the financial systems and the banking systems. Okay, and this guy John Taft is just going to give us a childlike kindergarten explanation of the way the banking system works. I guess he hasn't read Modern Money Mechanics, Money Creation in a Fractional Reserve Banking System. So this guy says the bank takes the deposits and puts them out as loans and charges interests due to the risks. But what really happens is that when a bank takes a deposit, it increases its capital reserves, which in turn gives it an excess capital reserve, which they can in turn loan money out at 10 times the amount deposited. So if you deposit $100, the bank can loan out $1,000. But they just don't move the money around in the vault and give it to you in a bag with a money sign on it. They just create an electronic entry in the borrower's account. And so when they're basically creating money out of nothing. And that's what banks do. This is how money is created in the money supply. And he neglects to say any of that. And Radigan doesn't say a word because he's very knowledgeable about fractional reserve banking and how the system is working. But this guy just gives us the kindergarten stuff. And so he talks about the risk that they charge the interest for. Man, I don't see any risk when you can just create money out of thin air, charge interest on it, and then take away the good or the product that the borrower buys at any time. I don't see any of the risk. But here, let's listen to what this guy says, and maybe we'll learn something.
You can make money a lot of other much easier ways.
Well, I'm going to disagree with you right out of the chute. Now, let's start with the whole concept of banking. You're taking money from depositors,
Imogen.
I hope.
Thank you, Imogen.
Large deposits
Yeah,
from Imogen.
yes.
Yeah.
She expects that she can call the bank and get her money back dollar for dollar tomorrow if she wants.
She's very
Not
demanding.
in the Eurozone, but here.
So she makes a deposit, but wants to make sure she can get her money back.
Okay, well, here we go. And then the bank takes that money and it puts it out in the form of loans to
The bank takes that money and puts it out in the form of loans.
Rob for years, 5 years. And we also take the risk, no offense, Rob, that you might not be able to pay back the loan on time. So
The risk.
we're arbitraging your desire for safe short-term deposits with long-term risky assets, and that risk-taking function is at the core of the banking system.
Bank charters.
The risk-taking function is at the core of the banking system. Man, I sure wish I could take those risks. Just take electronic money and create it out of thin air and just go out and spend it. Wow. That's why these guys are rich, and that's why we're poor, and we continue to stay that way because we don't question anything, man. I sure wish that people would watch this and learn something. Read it. Fractional reserve banking. Google it. Do whatever you need to do. Modern Money Mechanics. It's a Federal Reserve publication. Learn about how money is created out of debt.